So I'm going to one class on climate finance or sustainable finance. Increasingly, it's called sustainable finance. And that's actually hopeful because that's a broader concept than climate finance. And one way you will understand this is when I start talking to you about ESG, environmental social governance. I mean, part of the problem is that we're going to have to in the next 20 years, we're going to be in this race with time. We're going to start. It's going to start clicking in our heads collectively, and this is going to be an important process, right? That even we're looking at something that's very long term, but incredibly urgent, and we have not yet mastered this. We don't have that sense of urgency even now. We're beginning to have it. But the power structure doesn't have it. Okay? And the power structure is ready to establish quo. Okay? The power structure is both a set of industries but also societal norms, how we do things. The much of politics is really stupid politics. Okay, it's useless in the sense of trying to do good for society. It's not geared towards that, and we're sort of just busy. We've gone through a lot, right? So we're also busy just going through a lot at the same time. We've gone through war on terror and now another, set of wars, big, and the crisis, and then this crisis, and then that crisis, political turmoil, pandemic. I mean, we're kind of busy, just surviving in that sense. Right? We being collectively the human population of the world is very busy. We have a lot of problems that are immediate. But we also have a system, capitalism, that is not geared towards dealing with those kinds of problems because it causes them. It's very hard to have a solution within a system that causes the problem. So how do we change capitalism? You're going to have to change it quite fundamentally. And imminently. For example, we're going to have to have a huge research and development project, right? A global program to deal with climate change, especially when we get from mitigation to adaptation. Right? There's two issues about climate change. One is trying to prevent it, right? Trying to address it by reducing the emissions. Okay, that's called mitigation. Okay. And we're still in the phase where we do a lot of that. This whole transition, this net zero carbon transition, or carbon neutrality, or however you call it, right? That's a plan and I'll talk more about that plan, to basically stop greenhouse gas emissions, or to have them reduced so much that we can absorb them. And half of the absorption are natural sinks, what we call carbon sinks, that absorb it, like the forests. Oceans do that to some degree too, right? The earth does it to some degree, the nature, right? So that's the whole question of how we use land and what we're doing with it and all that, right? And part of it is going to be technology, like carbon capture and storage technology, which we have to develop, right? But we're going to have lots of technological change geared towards that. And then more profoundly, we're going to have to start adapting to the damage done by climate change. Right? So for example, if the famous wine regions like Bordeaux or Bourgogne or, what is it, Mendoza in Argentina, right? These areas are going to burn up. They're incredibly vulnerable. They're not going to be able to do this kind of wine production that they're doing right now. So then the question is, how do they adapt to this, right? How do they adapt? How do the ski lift operators in the Tyrolean Alps of Austria, how do they adapt to the fact that they don't have any snow anymore? You know? So the adaptation to climate change will be very locally determined, okay? But it's going to be a global issue, you know? And then you have global issues, you know, not just the ski operator and the lobster fishermen and all those people, but you have rising sea levels, and you're going to have many areas being flooded. You know, if you don't want Manhattan is, I mean, you know, especially downtown Manhattan, that's a very vulnerable place for flooding, or Miami or whatever. If you don't want to, how do you stop the sea when it's rising? Right? You have to have like. The Dutch know how to do this because they have been below sea level for a long time. You build these huge structures out there. You know, New York City has already hired the former, the guy who does all the Dutch water management. He now runs New York City water management, right? That's already adaptation. And adaptation is permanent. I mean, at some point, we're going to have a changed planet and we're going to have to adapt to it, right? And if we don't, we die. But in the process, also, you're going to get lots of people moving, right? So it's not just immigration, emigration anymore. It's going to be migration. Migration is a completely different problem than immigration. Because now you're talking about millions of people going at the same time. And we're beginning to learn this, right? Because, for example, if you take Syria, the civil war in Syria in the mid-2010s, it's still going on, but it's, you know, the rebels lost. So they're hanging on, right? There's different groups. But this, I mean, on the one hand, there was the Arab Spring came from Tunisia, ran through Libya, ran through Egypt, and then hit Syria. And so it exploded politically, right? And it's again a Sunni Shiite conflict because the Assad regime that has been in power, the Alawites are a sect that's tied to the Shiites, right? More majority of the population is Sunni. But the Syrian problem was preceded by a 4-year drought. Okay, which desertified 30% of its land. I mean, so in a 4 or 5 year period, lots of pretty vulnerable agriculture just disappeared, and water disappeared. And so there was and it's a very tribal, town-based kind of village-based kind of society. They were starting to fight with each other over land and water. You know. So and these are anti-regime and pro-regime tribes, right? So there's a complicated structure that I don't even understand very much. I don't know much about it. But so when the revolt came, and these are not unified rebels, okay? They're different warlords, basically, right? The civil war was a multiple war right away, and 5 million people moved out of Syria into Europe. All at once, right? So we have that. Now we have Ukraine. Of course, there's a lot of racism there, right? The Ukrainians, they're blonde, white, let's have them. You know, the Syrians, who knows, right? The Europeans are pretty anti-Islamic and they're pretty racist. It's pretty clear to me. As a Jew, I can tell you that. Because they also don't particularly like Jews. But we're beginning to get a sense that there's going to be millions of people moving. And that needs to be accommodated. Right? That's part of the adaptation. But this problem is a problem that the longer we wait, the worse it gets. And it gets cumulatively worse. It's not. This is a cumulative problem. It has like an exponential dynamic. Okay, it's not just a linear problem that gets linearly worse, right? It's a cumulative problem. That means things that get worse make other things get worse. So it's interactive, and it will reveal relatively fast, like relatively fast is within the next 8 years or so, right? How incredibly vulnerable we are to this. So we're going to wake up. We are just beginning to kind of like a deep sleeper in their bed. We're just beginning to kind of get into lighter sleep, moving a little. We're just before waking up. So the waking up is going to be really important. Okay, that's a crucial moment. Whether we have the wherewithal to do this together and have a plan. You always have to have a plan for this. You have to have a plan. We're just beginning to figure out the plan. The plan is this transition. But huge amounts of questions within that plan, within that transition, are not yet addressed at all, right? How do you make long-term investment decisions? How do you do sustainable accounting? How do you price carbon? How do you have technological change, which you need to organize rapidly, just to figure out how buildings that exist, how do you cool them differently, okay? All these questions, for example, this is the point I wanted to make before. Technology is private propriety, is proprietary knowledge. It's protected by intellectual property rights, by patents, copyrights, trademarks, etc. Right? So that the innovator has a first-come advantage and becomes a monopoly for a while. You cannot have that kind of technological property rights system when you face an emergency like this. You have to have open source, or more importantly, knowledge commons, where you organize collective knowledge, but under certain rules. Like Wikipedia is a knowledge commons, right? So knowledge commons are going to be incredibly important. You're going to have to organize this research and development revolution as a collective effort, either open source or knowledge commons. That's like both of them are out there already, but they're minority. They're marginal. You have to have, above all, a very clear mobilization of private and public interests cooperatingly in a cooperative way. So you need to have very good government, and we don't have very good government yet. We have, I shouldn't say that, but we have gone into a direction which is the wrong direction, where we're politicizing technocratic issues, right? And we're also politicizing the people that we put into government agencies and regulatory bodies and all kinds of things, right? And that's a very dangerous route to take. You have to be beyond this kind of narrow politics about this. That's going to be probably the biggest challenge, to depoliticize and then communize, right? You have to make this as a mission of common interest, of public interest, right? So we have, like, ideologically, we have problems already, right? Of course, in a way, for an economist, this is incredibly interesting, okay? This is all, these are very interesting challenges, right? So it's a good time to be an economist too, right, on that level. But you have to be interdisciplinary. You have to have a sense of geography and history, and not just mathematical modeling, right? So economics will change a lot. Okay, so I'm excited about that. Right? But the most profound thing is that we've spent 300 years or 250 years building a fossil fuel economy. We are not even conscious of how totally, utterly bound we are to fossil fuels. Everything we do is fossil fuels. Plastic is fossil fuels. Medications are, fossil fuels. It's hard to even imagine, right? How totally, like crazily, one-sidedly, we chose. These were choices we made, right? To be a fossil fuel-based economy. And now we have to stop it. We have to end this. And we have to end it in a hurry. We waited a long time. We wasted a huge amount of time. We could have handled this very differently, but we didn't. And so we're going to face this socio-economic industrial revolution of getting out of fossil fuels, one way or the other. And that means that we really have to go through a very profound process of changing our structures, right? The structures, our buildings, our machinery, our factories, our offices, our transportation means, our food production, everything. There's not a thing that I can think of that's going to be not touched by this. And we don't have a lot of time to do this. And we've started to do it. We have done maybe about the first 5% of it. Okay. This is going to cost us, $3, $4, $5 trillion a year globally to do. The estimates are $3 trillion a year. For this, if you want to go through the whole transition for about 10 to 12 years. That already raises the question: how do you finance this? That's the whole idea about climate finance. Okay, one of the things is, how do you finance this? The second thing about climate finance is, how do you judge? How do you change judging the value of investments, companies, when you have to externalize? When you have, until now, you have completely externalized their impact on the environment, and now you have to internalize the impact on the environment. Okay, let me repeat this. Not only have we built a system completely based on fossil fuels, but we also have built a system where of private valuation. Okay, it's a profit-driven economy system. And so it has a private valuation system where the emissions that cause climate change are not part of the calculus, the valuation, right? We assume we have a system, this financial system of valuation, that treats the emissions as non-existent. They don't exist. They're not accounted for. And this is a system that treats, by ignoring the emissions, it treats the emitters, those who do the emission, as if they didn't do anything, and that there's no risk, there's no cost. Okay. So we've also built a system, okay, a system of a hierarchy of profitability, if you will. A structure of valuation and prices, okay, that is completely out of whack with what we're facing as a problem. The problem that we're facing in our own economic and financial calculus is invisible. It doesn't exist. So we have to, normally we have like a mechanism. There's a long history, which is an interesting history in microeconomics. Okay, how do you internalize externalities? Pollution is an externality. Okay, meaning it's outside of our cost-benefit calculus. We don't calculate pollution, so we undervalue it. Okay. And that means we're creating an incentive system to produce this, because we're not taking account of its costliness. We're not taking account of its riskiness and the risks it creates, right? By ignoring it, we're encouraging to create more of it. But then we learn, we have like brilliant economists, right, that have spent a lot of very interesting time thinking about how do you internalize externalities, shadow prices, or so you have two approaches, right? You have cause and pigou. And after pigou. These are important economists. They read well, they're smart, and they're conservative, they're neoclassical, but they're profound. Okay. The problem with I'm going to go through the approaches in a second, but the problem is that we're now talking about a systemic externality. That's much more difficult, right? This is a bigger problem beyond cause and beyond pigou. Both of these have alternative approaches to externalities that assume that the externality is smaller than the profit body. That it's not the main cost or not the main benefit. That the externalities are limited. And when they're limited, you can relatively easily, either with a Causian property rights arrangement or a Pigouvian tax, you can internalize these things. But when you have climate change and you have the emissions of greenhouse gases and your entire fucking economy is based on greenhouse gases, then it's not an externality. It's a systemic threat. It cannot be internalized in those fashions alone. Okay, that's a huge challenge for us conceptually. How to transform capitalism to be able to build the entire economy around this being the center. That's a huge challenge. That's your generation's job. So cause is basically the idea is that you can have arrangements between people, okay, on the basis of distribution of property rights, so that you incentivize people to internalize the externality. And this cap and trade market that I was talking to you about, the emissions trading, which is one way we're trying to price carbon, trying to internalize this externality, right? That's a Causian idea. That's cause, okay? Right? But if you have never read Cause, read him. There's a small article that got him the Nobel Prize deservedly, about the theory of the firm. And the firm is a bundle of property rights. Pigou is basically about emissions you have to tax. So this is about emissions taxes. In this case, it would be a carbon tax, which we have already, like in many countries. Okay, and like Sweden has a €137 carbon tax. That's a high tax. That's the one that we should have already everywhere, right? And the Swedish economy has changed. It's a case study of how that works. Okay, it's an interesting case study. It's a successful case study. But the Swedish economy is very flexible. Okay, and it's a small economy that can be easily coordinated, and it has very good government, even the right and the left. The fascists not. They want to get the power. They're called the Swedish Democrats. They're not. But there is a consensus not to ever get them into the government. And they got stronger because of this. There is a political reaction to this. Political reaction against immigration, political reaction to climate change. The extreme right is anti-climate change policy, okay? They think that this is the new hoax that makes the globalists globalists. Right. So, forget about Bolsonaro, right? One of the possibly good outcomes of this is that the fascists will die. They will disappear. Nobody's going to have time for that. But it's also possible that they take over. Either way, we can also mishandle politically this problem, and then we have a bigger problem. But eventually, I'm sure it will come down to destroying the extreme right, to delegitimize them. Right. And I think that will be part of the process. That will be part of the process, and that will start first in the US. But maybe also Brazil. Brazil is a potentially powerful country in terms of having a huge role to play in this, because it does have a strong extreme right, and it has a huge amount of, how should I put this? It has the biggest carbon sink in the world. That's the Amazon. And then it has this huge agribusiness thing, which needs to be changed. And then it has potentially great farming techniques that other countries will learn from, right? So there's a lot of stuff about Brazil that's very important here, right? But it also has this crazy politics, right? That everybody will have too. It's a very political process, because you're going to change your society. You're going to change capitalism, the way it works. And by the way, if capitalism doesn't change itself, then we're either going to have long wars, and then it doesn't matter what system you have, right? Or we have something else than capitalism. This is the moment of truth for capitalism. That's why this is a very, I'm glad I'm alive. I can see this. I've been, all my whole history, I can see, okay, I was a Marxist, and now Marx is really useful, but I'm no longer a Marxist. But now I understand how useful Marx is, because Marx has a long view. Right? And eventually he talks about that in very nice passages, right? How do you think the long run? That's an important challenge here, right? By the way, Aliata is really also very good on that, okay? He really thinks about, we can talk about that. My favorite lectures of Aliata are about the long run. I've had 2 or 3 of those. Aliata is a guy that is kind of the head of a particular approach in heterodox economics that we all appreciate here, right? So climate finance is precisely fitting into this transition scenario, right? And you're beginning to see 2 things that are very, very important here, right? I'm trying to make that point, right? It's a very profound process. There are profound questions. This is not just a little addendum, appendix, right? This is something that, as it penetrates into the mainstream of finance, changes the way finance operates already. So you're beginning to see the radical nature of this transition just by looking at finance and how it's changing, and the questions that it has to face and deal with, okay? And I'll talk to you about that. And I started already by talking to you about the fact that those risks that come with climate, they're not your normal risks. So your normal risk modeling, it doesn't work here. You have to have a different type of sense of risk. This kind of dynamic, cumulative type of risk. And the risk is kind of interdependent with each other, right? And so, that's already very interesting. But the second thing is how incredibly difficult this is as a process. It's an incredibly difficult process to change without a revolution. Who decides? How do you frame this question? Okay. And all this trial and error process, right? Let's see how this works. And then, you collect information just to get the data. All of this is about things that you don't have any data about. You know, you have to create the data and then see what sense this makes. You know, so it's very profound, very transformative, very difficult to do, and this is just one little sliver of the whole landscape, right? In terms of figuring out how we're going to eat and change our food habits, our transportation habits, how we build houses, and live in them. It's profound and transformative and very difficult. That's all I can say about this. Okay. So let's talk about climate finance. And so before I forget, because I don't want to forget this, one of the things that's important for me to understand also is how it's different in the US versus Europe versus China. And I'm sorry, I'm looking at those three power centers, but those are the three power centers I'm looking at, right? Because I think that there's this triad, other countries are going to be powerful, but they're going to be more powerful regional or as a global path finder. Brazil can have an invention that everybody wants to have, or like ethanol, right? Running on sugar, not gas. That's an innovation that everybody would like to have. Your car smells good too, but what the organizing thrust of the world is in those three power centers. They are power centers for a reason. But they're also increasingly, importantly, different from each other. You don't have a homogeneous capitalist economy anymore as you had with either the British hegemony or the US hegemony. The pandemic ended the US hegemony. That's my argument. And so then there's an issue of how do you compare those three and what they're doing, and how do you understand their specificities, right? Because they're coming from somewhere. Each of these comes from somewhere, goes somewhere, right? And so you have to understand the specificity of their voyage, of their transformations. Then you have to realize that they're at different speeds with different priorities, and how do they communicate with each other? How do they punish each other if they don't? How should I put it? If they don't see eye to eye, or let's say the US doesn't do anything, then it's a free rider. Then it has to be punished. How do you punish the US for not doing its share of the transition? That's a really interesting question, okay? It can only happen if the Europeans and the Chinese see eye to eye on that question, right? The idea currently is to have carbon border tariffs, carbon border tax adjustments, where you're raising the taxes and import tariffs, I should say, import taxes on countries that you have found wanting in their effort. The free riders. You're going to have to punish the free riders, and the biggest free rider likely is going to be the US, unless it has a different politics. This will be decided in November. November 22 is an amazingly important election, but it's likely that the Democrats are going to lose, even though right now they're doing well, surprisingly well the last month. But the other thing is that this has to be global. This is a global effort, right? This is a systemic threat, an existential threat for the species, for us human beings. Okay, we have to think of human beings as human beings, us together in this. And so, how do you set aside your adversarial and competitive relationships between those power centers to have a global approach to this? So Nancy Pelosi, the Speaker of the House, the number 3 politically in the US, she went to Taiwan The next day, the Chinese said, we're no longer going to talk to you about climate change. The UN, we're going to break off our relationships with the UN climate change and the military cooperation. Then you can see that this is ridiculous. I mean, it was a stupid thing for her to go there, right? I mean, she had her own issues and whatever, right? But, that's kind of narrow-minded, okay? But then the Chinese, like, Biden spent like weeks discussing with Xi how to talk about climate, right? And then in Glasgow, they had an agreement last November. And this agreement, it's like a fart, it's gone. I mean, that's ridiculous. So we have to do better than that. But finance is one of those forces that can be global. That's part of, it's the most globalized service in the world. And with digital currencies, it becomes radically more global if you want it to be. Because you can build an architecture, and you can build a technological architecture of a supranational system. And I think that part of what's interesting to me is that climate finance, because it's this collective effort, right? And it's driven by activists, by political forces, by NGOs, by young people that are very politically committed to sustainability. Okay, they drive this process. It's already a political process, right? Because it's a political process, and there's very little difference between a young American and a young Brazilian and a young French and a young Italian and a young Chinese on the question of sustainability. They could agree. The young people could be solidary more easily than as they get older, they get more fucked up. So this is a force that could be global. And there's already, from the very beginning, a search for global standards. And so they're building an architecture, institutional architecture, regulatory architecture, which you can see already beginning to take shape. So you have already it's all voluntary so far, okay? These are voluntary efforts, right? But you have a sustainable accounting standards board for international rules, financial rules for how do you account for emissions and reduction of emissions as a benefit and emissions as a cost and all that, right? And there's global rules going to be written. The climate risks are in the hands of a global regulator, the Financial Standards Board. No, what am I saying? I forgot it. I told you about this. Financial Stability Board, yes, FSB. Let's write it down. So you have the SASB, that's the Sustainable Accounting Standards Board. You have the Financial Stability Board, they do climate risks. These guys do new accounting rules. Precisely to internalize this externality. Yes. There's more. We're beginning to build also a global superstructure of regulations and rules. Right? And that means this is already a serious effort that's grounding itself, right? As something that can kind of push the other parts of finance into a direction. Right. Yesterday night in preparation, but it's something that I should have done earlier because last minute you never prepare well. I was trying to see all those new global initiatives in carbon finance. Right? There's a lot. I found like 10. I have a list of here, but I'm not going to talk to you about that because I don't know enough about those things. Right? So The one thing that we've talked about already are the risks. Let's talk about ESG. This is environmental social governance, by which they mean corporate governance. So it should be environmental social corporate governance, ESG. Does anybody know anything about it? Heard about it? So again, this is pretty fascinating. It's fascinating because it caught on and then took off remarkably. Then people were saying, "Wait a minute! Now, whether there's a reason, there's a reaction against it." And then there's the next push is like, okay, we got to do things a little bit deeper than this, and so there's this process, right? The political process is they're going in there, then there's a reaction, and then they have to figure out how to beat that reaction by getting better. But there's a background. The background is important. Let me talk to you about the background to this. So this is about how you do corporate valuation. How do you value particular shares, right? Stock prices. Market valuation of companies. Now, I have this kind of the theory where I see capitalism evolving chapters, right? And the chapter that we've just gone out of is the chapter of finance-led capitalism that came in the early 80s through the Reagan-Thatcher revolts and deregulation, the new liberal policy regime, the Washington Consensus. So you have a policy revolution in the 1980s that put in place the system we have now, where finance drives the economy. And finance becomes rapidly globalized, starting with the euro currencies market. Your question number 2 on your exam tomorrow. But underneath that is part of this financialization process that we're talking about here, financialization, whatever, is a principle, a principle that became the holy grail in corporate finance, and that is shareholder value maximization. Shareholder value maximization. Okay. And the idea here is that the single thing that companies have to worry about is maximize profits in the sense of maximizing the stock price, the share price. That's all they have to worry about. Give the owners the maximum. The owners are the shareholders. This started in a debate, and this started with Friedman, right? Friedman wrote this very, very, very important article in 1970. Milton Friedman is like one of the most influential economists in the 1970s and 80s. He's the anti-Keynes, right? In America. When Keynesianism stops in America, which is with Reagan, Friedman prepares the ground for this, like Hayek prepares the ground for, these are ideological superstars. Right? So Friedman is an economist who's an ideological superstar of the right wing. And he lays out this argument, and everybody kind of ultimately accepts this as what the right is going to do, that all that counts is shareholder value maximization. If companies stray away from this, they're going to lose profits. By the way, the reason why ESG is taking off 2, 4, 5 years ago is because economists studied companies that followed ESG principles, and they realized they were more profitable than the ones that followed shareholder value maximization, and that changed everything. And it wasn't just one study, it was like 5 studies or so. Right? When consistently in 4 out of those 5 studies, it was very clear ESG companies are better run, and they're more profitable, especially in the long run, over longer periods of time. And then everybody says, hey, that's good. Let's do ESG. More profit. But this number going back, right, to the beginnings of this, right? He made this statement in 1970 about shareholder value maximization. Then we go through this stagflation crisis, which is the end of Keynesianism. The Americans adopt an anti-Keynesian policy regime through Reaganomics, 1981. And then you have 2 things that are crucially important, okay? Once you have 1981 tax reforms, then the top CEOs, the top managers of companies want to be paid in stock options because it's much lower taxes. Right? So once they want to be paid in stock options, the old agent principle problem between managers and shareholders gets resolved because the managers are thinking like shareholders. Okay, right? So they want to have this shareholder value maximization because it goes straight into their pockets. But then, remember, I talked to you briefly about the 3 bubbles. The American economy becomes a bubble economy of asset bubbles. And the first asset bubble is the stock market boom of the 1980s. But it's a boom where you have a group of very aggressive people that have huge amounts of funding behind them through the invention of junk bonds, or now called high yield bonds. And they can issue the high yield bonds to get lots of money to attack undervalued companies. Many American companies come out of the stagflation crisis totally undervalued. Share prices very low, way lower than their potential would reflect. And so they're easily attacked. Okay. And then they have to defend themselves against the attacks. And if they don't want to lose to what we call these raiders, they're called raiders, corporate raiders. Just Google it, corporate raiders, right? The stock market boom of the 80s is driven by these corporate raiders, right? They're junk bonds. And these are legendary characters in America, right? Carl Icahn, T-Bone Pickens, Ivan Boesky. Right? These are legendary characters, okay? But because they attack, and they only have to attack one company for all the other companies to panic in that industry. So the companies defend themselves in a variety of ways, but the key ways, 3 of the 4 that they use, has to do with making a deal with their institutional investors. The pension funds and mutual funds, insurance companies that own their shares. They say, stay with me, don't go with the raider. And the companies, the institutional investors, yeah, I'll stay with you, but you have to get the stock price up. Okay. And so what I'm saying is that because of this trauma of the attacks, they're forced to do shareholder value maximization, and then they're motivated to do this because now they're paid in stock options. So this then takes complete hold in American corporate, thinking. Within 5 years, shareholder value maximization is, but it's a very perverse thing. For 2 reasons. It makes them financialize too much, right? They're trying to manipulate things with the share price all the time, right? So they're doing share buybacks, or they're buying other companies to jack up the price. Right. So they're starting to do things that make very little sense, other than just trying to get their own, their own share price higher. But it has nothing to do with the long-term viability of the company. Okay, there's a conflict, and this is an important conflict between short-term maximizing of profit and long-term growth. All the things that make a company grow for the long term, which is research and development, investing in a stable labor force that stays with you, building good factories, product development, all of these things that are the foundation of a corporate thriving are long term. But shareholder value maximization is totally short term, right? Quarterly profits, and all that counts. This is a contradiction. And this is one of the reasons that the contradiction eats those companies. Right? And it goes to this is my second, but it goes to a completely perverse degree where the companies announce layoffs, throwing workers out of work. And Wall Street jubilates, the share price goes up right away. Right. And so when you get into a mindset, when you get into a dialectic, when you get into a dynamic where cutting your own shit, you cut yourself and everybody jubilates, you're going to cut yourself too much. I don't know how to put it, right? People, this is like a bloodbath watching, right? More blood, yes! No, it's not. You're weakening yourself. So, in comes ESG. Okay. And this ESG is driven by funds. So now you have the politics of funds. So, but for example, right, there's 750,000 American professors, college professors. Right? We have a fund called TIA. We own it, right? This is our pension fund. Since we're professors, we're all engaged investors, right? And so we have always made sure that TIA is top notch. They don't shit around. They do well. They have very good people run it. Okay. But we also have we have. I mean, most professors are kind of on the left. Okay. Right. And so we're interested in climate. So we have, we have meetings, and then we go and Zoom or whatever, and we tell the leaders of the TIA that we want to take a long-term view, and we want to do ESG. The TIA is the first one. Other pension funds follow suit. Usually public employee funds like CalPERS, California Pension Fund, California Workers, public sector. So we have pension. Now these pension funds are huge. Okay. You have 750,000. I mean, if you have 750,000 professors in a pension fund, that's a big plan. Okay. That's a big fund. It's like $7-8 trillion. And a fund like that, CalPERS, and you take 10 pension funds like that, right? And they all say, okay, let's do ESG, then ESG is going to happen. Not everywhere, but companies are going to realize that there are these shareholders out there that are voting for ESG, and if they get 15 or 20% of the vote, management has to take note of that. That's a threat to them already. Anything that has more than 10% of the vote, they pay attention to, roughly. Okay. So now you have about a quarter of all finance ESG committed. That's just in 5 years. Now you could say quarter is not a lot, but quarter is a lot. And it's growing, okay? So what does ESG mean? So you have you can break down the environmental, the social, and the corporate governance, right? And each of them has 3 or 4 major things. The environmental obviously has to do, most importantly, with climate change and your exposure to it, your contribution to it. But also it has to do with declaring your zero neutrality, your carbon neutrality goal, and then having a plan how to get there. What are you going to do getting to carbon neutrality, right? So now most companies that are interested in ESG, they have to make a plan. They have to announce it, and they have to, let it be criticized, et cetera, et cetera, et cetera. And then once they say we passed the plan, we have it, then they're going to be monitored, right, by the funds, how they're doing. And if they don't do well, then they're going to get punished. Stock prices. But there's also provisions in the E part of ESG that go beyond this. Because one of the key problems with climate change is that most of the emissions disappear, fall between the chairs. They're called scope 3 emissions. They're indirect emissions. They're like, so Hofstra, my university, can count its emissions, but when I start flying around to Brazil, that's the scope 3 emissions. They cannot capture that, right? So there's a whole life cycle of stuff in products and how it circulates and who gets it, which we call scope 3 emissions. There's scope 1 emissions, scope 2 emissions, scope 3 emissions. But the scope 3 emissions, which are more than half of all the emissions, don't get counted because nobody knows who should count them. They fall literally between the emission shares. So there's a lot of emphasis on getting your act together enough in terms of knowing enough about what happens to the products once you sell them to people, to know what the scope 3 emissions are, who does them, how do you contain them. So there's a big part of that. And the ESG is the first part of climate finance that insists on scope 3 emissions being part of the picture. That's already very good, right? But and then there's a third category, just in terms of just environmental, in terms of pollution, in terms of, different environmental performance standards, in terms of weight, how do you deal with waste and recycle your waste, right? The social has to do with your workers, okay, your clients, your consumers, and your communities that you operate in. And in terms of the most important, it depends, of course. If you're a very automated firm, then the workers are not that important to you, right? But the workers are the most important part in the S. And it's about how do you treat them, right? What kind of procedures do you have when they get hurt? How do you deal with diversity? How do you deal with promotion? How do you deal with internal conflicts? How do you deal with unions? What fringe benefits? Do they have medical leave, sick leave? Because most of these things in America are not, they're corporate, there's no law. Okay. We don't even have paid leave for emergencies as a law in America. Depends all on your corporations. And what kind of pension plan and all that, right? So that's the work. That's 1/3. I mean, that's more than 1/3 because the biggest number of provisions in the S part is for how do you deal with your workers. But you're also supposed to deal with your customers, your consumers of your products or services, and then with your local communities. That could be extremely important in the climate change battle, but it's not yet the strong enough part. I don't know whether whether it's a thing in Brazil at all. Is it a thing in Brazil? Okay. But it just took off in India, for example, right? There's like the last 6 months, there was a huge debate among Indian capitalists, which are very much family-based giants. Okay, how to do ESG when they're family-based giants, right? Fascinating problem. They don't have institutional investors as we have in that sense, right? So that's one thing, right? So we have risks, we have ESG. But what's important here, and this is something I'm working on right now, right, is that already at the center of the capitalist thought process, okay, corporate valuation, right, you now have this idea that the environmental issues are linked to democracy and to the social. That there's a bigger picture out there of reform. That you have to think of sustainability in a broad sense. So it's ESG, okay? And this is politically very interesting to me, right? I'm writing about politics now, an article, right? And I can use the ESG as saying, okay, even the finance people and the funds and the corporate management people, they understand that there's a bigger issue out there. It's not just the environment. It's like, how do we reorganize capitalism in a more sustainable way, broadly speaking? And so that's interesting politically. Yes. So that's another part of corporate finance, right? Then you have this whole question of reporting, of disclosing, right? What we call climate-related financial disclosure. And this is part of this effort of valuation and accounting, right? Of internalizing on a very massive scale this problem of emissions. Right? So the financial institutions, they have to disclose how much have they invested in green assets, how much they invest in brown assets, and how do they deal with the fact that the brown assets are going to be a problem. So let's talk a little bit about green assets and brown assets, because that's a key distinction in climate finance, right? So remember, you have a transition, okay? You remember I told the ocean liner, we're building a new ocean liner, and we have to then move stuff from the old ocean liner to the new ocean liner as we build the new ocean liner. That's what we're doing. You can think of these two ocean liners, big ships, right, as brown assets and green assets. Brown assets are assets that have greenhouse gas emissions. We need to get rid of them. Green assets are the ones that are not having those emissions. So we need to go from oil-fired plants, coal-fired plants, to solar or wind power plants, geothermal plants, nuclear plants, nuclear power plants. Okay? But then the oil-fired plants, the gas-fired plants, the coal-fired plants, they're brown assets. They're bad assets. They're bad. They're the assets we need to get out of. We need to transition out of. And we need to transition into green assets, like those solar panels, okay, or those wind turbines. But we also need to change our electricity grids. We need to build smart grids. So we're going to have old electricity grids that we cannot make smart. Some of them we can, some of them we can't. And then some of them we're going to change. We're going to add the smartness to it. But the others we have to rebuild because they're too old. Okay? So the ones that we cannot make smart electricity grids, they're brown assets. And the new ones we're going to build in their place, they're the green assets. Okay? So you're going to have something that becomes less and less good, less and less valuable, the brown assets, and something that is very good, but we have to get built. And those are the green assets. Okay. And so part of what climate finance is all about is two things. One is, how do you move funds out of the brown assets into the green assets? You have to move huge amounts of funds. That's how you jump from one ship to the next. Right? But then you have the second problem, which is, how do you devalue the brown assets as stranded assets when they have become obsolete? How do you write them off? How do you socialize the losses that come when you have to retire this plant, when you have to close this refinery, when you have to stop this pipeline? These things become worthless, right? So then you have huge losses, right? I mean, remember, I told you at the beginning of this class that we have built this entire economy on a socket of fossil fuels. That socket becomes worthless. These are stranded assets. That's a huge financial stability risk. If we don't deal with this in an organized way, then they become devalued in a crisis. But if we let them devalue in a financial crisis, it's a depression. You know, so the problem of when the brown assets become stranded assets and we have to socialize their write-off losses, we have to do this in a smart way so that we don't create a depression. At the same time, listen to this, moving into a new energy system is going to be very inflationary. So we have intense stagflation problems. We're already starting with this, coming out of the pandemic. We have a new macroeconomic environment. Right? So we need to be able to manage that. So you need to have much more understanding of supply side economics in a real progressive way, right? Not just cut taxes so that people, businesses, rich people want to get richer, invest, but that's not supply side economics. That's Reaganomics. So the climate related financial disclosure is crucial to map out the landscape of where are the brown assets, where are the green assets, how can we devalue them over time slowly, and how can we build up enough profitability valuation to green assets before we even tested them properly? How do we scale them up? So the financial disclosure, the accounting is key because these are the price signals we're going to get, okay? The price signals are based on having a good disclosure system and a good accounting system. We need price signals to do this incredibly difficult job of the transition. I mean, we have never done anything like that, okay? So the fourth thing, and then I can talk to you about central banks. Yes. The fourth thing is there's a funding mechanism now that's being put in place called the green bonds. Okay. And it was initially just governments, and then now it's corporations too. But it's mostly corporate, right? This is a very interesting problem from the very beginning, right? It's mostly corporations that are already green, right? They are kind of on the forefront, right? The companies that need it the most, which are the brown asset companies, they have not yet been able to enter this green bond thing. And part of it is that they don't pass muster with the certification verification process yet, because they're not used to this new regime. And or they're reputationally not allowed to in because everybody will say they're just greenwashing. So Exxon cannot be a company that does green bond yet, right? Because nobody's going to believe that Exxon is seriously getting out of oil. So, I mean, one of the things that I'm trying to imply is that, I mean, the green bonds are spreading rapidly, okay? So we went from like It started like 5-6 years ago in any serious way, right? Now we have almost $2 trillion worth of green bonds already. It's only about 5% of all bonds. But, that's a beginning. 5% in 5 years is not bad. But it's the speed with which it increases, okay? So last year it was 200 billion. Now next year it's going to be $500 billion issue of green bonds. 40% of green bonds are in China. China is the biggest driver of green bonds. And they did right away have internal regulations that are very tough. So they also want to set the standard, as in many things. The Chinese want to be the standard setters of the future, okay? That's a very smart plan that they have to dominate the world in that sense. And one of the things where you see it crystallize really fast is how they worked with the verification certification process of green bonds, right? And everybody says they're tough, they're good. Let's copy that. Look, there's a lot of details, right? I mean, there's also tax advantages for green bonds. Now you have a new type of bond called sustainability-linked bond, where you only pay interest if you have reduced the emissions that you promised you will. I don't know how that works. I just read that yesterday as I was preparing for this, right? It's been a while since I've done climate finance, so when I talk about it, I have to kind of spend an hour or two looking at a few things, flying through my file. I put everything that interests me in folders, right? And I can go back and pull them out in my computer. So one of the things that central banks are thinking about is to give green bonds preferences also when they do quantitative easing. This gets us to the question of the central banks. Okay? The central banks have several advantages here. Right? They can take the long view, and they do. Central banks tend to think long term. They're generally managed by very smart people who are very competent and who are beyond politics. Even if they're into politics, by the time they get into the central bank, they're working collectively as a group. They can't just be politically outliers. Right? Central banks are always managed collectively. Okay. Of course, they have the head is that's who the public sees, right? But inside, the head is not the head. The head has to operate cooperatively. And there's political interests, regional interests, there's different kinds of interests, right? But they tend to have very competent people taking a long view. But they're also not bound by the craziness of the politics. That's what we usually resent of central banks, that they have this incredible power, but they're unelected. In this case, it's an advantage. They can do things, they can act now. Even though in the US, for example, there's the right wing is like, you mentioned climate change and we're going to give you death threats. Central bank says, fuck you, I don't listen to you. I do my thing. You don't even know who I am. So the central bank, even in the most chaotic situations of politics as they are in the US right now, can just sort of calmly take the long view. And I know that they have different factions and they're fighting with each other and they're arguing and they're writing, research papers, throwing them against each other. Wonderful, great. That's very interesting for somebody like me. But the public pays no attention to this whatsoever. So they can act now when nobody else is capable and willing to act. And they work together. They don't necessarily work together, but they talk to each other. So the biggest line of contact is between the Fed and the People's Bank of China. That's more than between this part of China and that part of the US. So the central banks are in a very good position. But they're also in a good position because they're both the bank of the government and the bank of the banks, right? So they can also really have a big impact on the unfolding of the financial reforms, how the system gets reformed, right? They're in a very powerful position. And they have, especially since the 2007-2008 crisis, they have a new mandate that they're obsessed with, which is financial stability, systemic financial risk. How to manage systemic financial risk, how to have a situation never occur like they did in 2007-2008, how to prevent this, and therefore how to manage financial stability and look at all the things that make financial stability a threat, getting threatened. And for them, climate risk, climate change is a huge financial stability issue. Just as stranded assets, how to write them off. Because the stranded assets is like $10 trillion or something in market value. It's huge. It's like half of the country's GDP. You have to write that off, that capital stock. So they have a mandate to deal with this. They can argue this, they have the not only the right but the necessity to deal with this. So they're trying to deal with this. So they banded together. They have a group. NGFS, the Network for the Greening of the Financial System. So I don't know. You have to check. The website is NGFS Net or NGFS. What is it? NGFS. Who knows? I forgot.
We're greening the financial system.
Yeah, but the website. No, I know, but they have a website. Right?
I will find it.
Guttmann, yes, exactly. Guttmann. All right, thank you. That's not a great website, right? But in the website, the publications are interesting. So one of the things that the NGFS does, the NGFS is like 90 central banks and financial regulators. It's both financial regulators, that is like your financial market regulator, like the US would be the SEC, but also the central banks. So it's an umbrella organization just to meet and talk and discuss, right? Some central banks are like leaders. The Dutch central bank, for example, the Netherlands is very, very worried about climate change, and so they have amazingly good work, for example, on urban flooding. And the urban flooding is part of it is just a group of researchers inside the Dutch central bank. So you can see also, different central banks are way ahead of the others, right? There's a lot of variety and a lot of divergence here. But what they're doing right now, and that's important, they have climate scenarios. They're working on catastrophic, bad, okay, and least damaging scenarios. They are taking macroeconomic models, impact assessment models, and climate models, and they're trying to find a methodology of putting these things together to figure out scenarios that they can translate into economic chaos. That's incredibly important work to do. And they need to have this, what they call scenario analysis, in order to have climate stress tests for their banks. They can't have climate stress tests unless they have scenarios. So they were wanting to do climate stress tests. First, the Bank of England, and then Mark Carney, who was then the head of the Bank of England, who's now the leader, the world leader in how to deal with climate risks. He's the director now of the Financial Stability Board, and they do climate risks, right? He said, listen, we have to have scenarios. How do we do stress tests without scenarios? The whole idea about stress tests is to put the banks through a stress. The stress needs to be a scenario. So they're trying to get a global picture of permissible scenarios that they're going to throw at the banks and then other financial institutions and see, okay, if you go through that, what happens? Tell me. So they were doing the first climate stress tests last year, right? And I mean, they all agreed that this was useful but useless at the same time. That the quality of the stress test is still far from what it should be. That there's more questions than answers that came out of this. But they don't want to talk to people about it, so they're just having like summaries, right, that you can find in the Bank of England or in the ECB. The devil is in the details, and that's why it's interesting, but they don't give you the details. But it's a beginning. So the Bank of England does like 20 banks, I think, and the European Central Bank is doing about 130 banks. This climate stress test. But that's just one thing. The second thing is that they are very concerned about the climate risks and making sure that the climate risks are laid out, they're measured and they're laid out to the public. So there's a lot of disclosure. The central banks are very concerned about the kind of the climate-related financial disclosures, right? And this is the other part that the Financial Stability Board does, right? The Financial Stability Board has this task force that is run by Mike Bloomberg. I don't know whether you know Bloomberg. Task Force for Climate-Related Financial Disclosures. That's the EFSD. They have a report in 2017, and they have like, okay, you make your plan, you tell us your resources that you put into this plan, you tell us how you measure the progress of this plan, you tell us where your risks are, where your vulnerabilities. There's like 6 or 7 bodies of disclosures that they lay out. So they say, let's do it voluntarily first, before we make it mandatory. So now they're in this period, they have a 5-year period of trial. They're getting to the end of this next year. We'll see what they're doing. But they got 3,000 companies doing it in 92 different countries. And they're reporting to the central bank and banks, and they're trying to, there's going to be a global financial disclosure regime in the next few years. American companies and American government is completely steadfastly opposed to this. This is going to be a really interesting struggle. And, when are we going to do this without the Americans? And I'm pretty sure they're going to say, yes, let's do this without the Americans. And the Americans will realize they're going to get punished when they're not part of it. Just capital will not go there, because it becomes normalized and it becomes normative. So there's going to be like also an interesting process of globalization, of building this global regime, right? And the Americans are not into global governance, okay? You always think, the Americans are hegemon. This is like the 500-pound gorilla and all. No, in global governance, they're not. They don't do global governance. And now less than ever, right? They had moments when they did it, okay, like NATO or whatever. But now they're like that. That's why I also think that they're declining as a power. So that's that whole disclosure regime that gets pushed now. That's the other thing that central banks do, right? But then the biggest problem, the biggest challenge and the one that goes directly to the question of financial stability, is this question about green assets and brown assets. How do you move the system out of brown assets and into green assets? How do you move finance out of brown assets and into green assets? That's the challenge. And you have to have incentives. And when you have incentives, you can have positive incentives and negative incentives, okay? When you have incentives, you can have positive incentives that encourage financial flows into the green assets, right? So you can say, you're going to have lower capital requirements if you're a bank going into green assets. And you're going to have higher capital requirements if you stick with brown assets. So we can make your capital requirement, which already being globally regulated by Basel III, we can make them such that we're adding new layers of bank capitalization requirements where we're basically discriminating between your brown assets and your green assets. That's going to be there for sure. I have no doubt that the central banks are going to do that. And that's going to be Basel V. With also risk management on top. I think Basel V is just going to be in the next few years, and it's going to be a global regime for how we regulate banks on climate change. They're already talking about this inside the BIS, right? The problem is that, and this again has to do with ideology and with Americans, right? Again, in the neoliberal regime, right? Central banks are independent. Nobody can tell them what to do. But central banks are market neutral. You don't discriminate against or in favor of anybody. And with climate change, you have to discriminate. That's the whole point about the transition. You discriminate against brown assets and you discriminate in favor of green assets. So they have to get into a new ideological framework of not being neutral, of doing industrial policy, basically. That's going to be a big change, right? In the way, and this is where the Chinese have a big advantage because they always have administered credit. They always have more or less, I mean, they change it over time, of course, but, you know, in a way that the changes made the People's Bank of China more powerful, but also more constrained, where they can discriminate. Right? But they have state banks, and they have a very politicized, you know, differently politicized central bank than, let's say, the Fed. But then they're going to have to find a way, and this they have not talked about, and not thought about, right? How to socialize losses when the brown assets become the stranded assets, and you have to just write them off. You have to close them down. That we have not talked about. I have not seen this. But that's the biggest challenge out there, because that, if you don't do it in a plan, you're going to do it with a crisis. If you do it with a crisis, it's going to be such a profound debt deflation type of crisis that, you know, you cannot let that happen in a crisis. You cannot let that happen in a crisis. That's my argument. Okay. So I'm basically done. It's a little early. You know, but I hope you have a lot of questions. And yeah. Yes. Yeah, I think, you know, I mean, it's a little faster than I thought. Right?
You want to have the break now?
Yeah, well, yeah, I can have a break now, right? Just to empty my bladder. Right? But just to finish up, you answer your question. It has a huge impact on November election, right? But it's unclear what impact, because it will mobilize both sides, right? It just means that instead of talking about inflation or talking about climate policy that just got passed, right? The Trump story will become the number one story about the election for the elections, right? And then it's a matter of who gets to mobilize more people, right? But for him, immediately, okay, for him, this is the way to make money. He's there to make money, right? So he has this story, and it's perfect for him. Right? What happened yesterday to him is much more complicated for him, right? Because yesterday he had to go. He was deposed to the New York State Attorney General, and she asked him questions about his business deals as a businessman from before he became a president, where he lied to the banks, he lied to the insurance companies, he lied to the tax people about the values of his assets. He overvalued his assets for the banks and the insurance, so he gets better insurance and gets more loans, but he undervalued them for the tax people. So the same things have 3 million and 30 million. Same. And you can't do that, right? So he's been investigating him for years. And in the US, you have the right not to incriminate yourself, right? You can take the fifth, what they call the Fifth Amendment, right? And so for all the questions, and he said he would never, ever take the fifth. He made big arguments about this when he was running for only criminals take the fifth. And yesterday he took the fifth. For him, reputationally, that's a real problem that he had to do that. But that also means it's an admission of guilt. So I think that's a bigger problem for him. What happened here? There's 7 cases against him, criminal investigations against him. Totally different ones, right? And all 7 are problematic. But the big one is going to be not on the federal level, the big one is going to be in Georgia for what he did there with the elections. That's going to come in a few weeks. So he has a lot of issues. There's a real battle over American democracy, not least in how we treat this criminal president, right? And whether you can pursue him criminally. That's a huge question. He once said that if he stood on Fifth Avenue in New York and shot somebody, he would not lose a single vote. And that's probably true, because you said you're surprised. No, his voters, they're into him. They don't care about crimes. Anyway, other questions? Yes, in the back.
When you talk about the brown assets,
Yes.
are countries that already have a certain degree of a productive force developed. And what about the countries that are still developing their technologies that haven't gone through some phases of this revolution? I mean, how do these countries that underdeveloped and they would transition to the green assets?
Well, there's like 3 different answers, right? One is that you will have to mobilize a huge transfer of resources. That's for sure, right? There's already the ethical problem in climate change. There's a moral problem, ethical problem, that the areas that get worst affected by climate change are going to be the areas that are least responsible for having caused it. That's a huge moral issue. And then the moral issue gets amplified as a moral issue by telling them you cannot develop like we did, cheap fossil fuel energy. We can no longer do that. That adds to the moral problem, okay? So that's one issue, right? But also in terms of looking at the whole thing systemically and holistically, what happens in Honduras has to have the same value as what happens in New York. We have to get to a sense of solidarity because it's a global issue and we have to address it globally, and we can only resolve it globally, right? We have to understand that this is something we need to do together. We're not you against me, you aside from me, it's you and me. And that means that you have to have a very substantial, especially when it gets to adaptation, when we get away from mitigation and we get to adaptation, and we're going to have to do more and more adaptation because we did so little for medication and we did it so late. Then you have to have very large amounts of resources getting transferred, or funding gets created. We have to have a money machine, a global money issue machine that goes to those countries. So that's the second part. Right? The third part is that you don't have to have fossil fuel based development. So there's going to be a question of there's going to be a profound question as to what it means to have economic development, right? And what kind of infrastructure do you need? I don't know much about it, to tell you the truth, but I also don't think that we collectively have thought a lot about it yet, right? But just as you did not have to build a very complicated telecommunication system for fixed line phones, everybody in the developing world has smartphones, and therefore they didn't have to go there. You could just have everybody on a phone this way. We will get to other things that way too, right? We're going to have we're going to have different prefab housing, and we're going to have small non-emission cars, and maybe in many ways the developing world has an advantage because it has the commodities that we need, and it has also it can use different technologies before that they're not wedded to. They have fewer brown assets to get rid of, right? So in many ways, a lot of things, I'm sure that a huge amount of things of climate policy and development policy and transition policy will come from the developing countries and not from those 3 blocks. People will say, well, in Mongolia, they figured out make cheese like that. Let's do this. Let's try this, right? So I think that the one of the things that I can see is that this cleavage, this gap between developing countries among themselves and developing countries and rich countries is going to get reframed into something else. It's not going to be the same as today. And the other thing is we're going to have, this is also important, right? You can either help Honduras get its agriculture back reorganized, or you're going to have a lot of the Honduran farmers working in New York as delivery boys. Hondurans will either be there and survive, or they will come to your place. And this will tell people, like, wait a minute, it's better to have them. The Hondurans don't want to come to New York. Most of them, they'd rather be in Honduras. Right? So just by the fact that you can have a billion people move will change how we think about the developing countries, I'm sure. So I don't know whether that's a good answer, but this is a pretty complicated question that you asked, right? So it's going to be, we're going to figure this out as we're going along, right?
And think more about the level of centralization.
The level of what?
How centralized, how
yes.
The whole financial road institution have to be to deal with that.
No, but it doesn't have to be that simple. I mean, it's a combination of, what centralizes the rules, right? But finance is a very decentralized system, and it's more decentralized as the banks got weakened, thanks to Basel III. Right? So you have a lot more funds, and you have a lot more different funds, right? So you have exchange traded funds, and you have private equity funds, and you have sovereign wealth funds, and you have a lot of funds, which is precisely that the system is decentralized. And once you have a multi-currency system, and you have digital money being introduced at different levels in different places, it becomes more decentralized. Right? We always think of finance. No, finance is very decentralized, actually, and more decentralized than it was just 10 years ago.
Yeah, sorry, I took my words. I was making coordination.
Coordination.
How coordinated.
Yeah. But I mean, you're beginning to see the global architecture of coordination, right? And what's also interesting is that these institutions, which are new, right, they are under a lot of pressure from NGOs. There are a lot of pressure from political organizations, right, that are putting pressure on them, right? And they're responsive to this pressure. You had a question, the guy from Baluchistan. Sorry, I don't know your name. Khalid. Okay.
But there is one problem, like, I mean, these funds, they transfer from state to state from
digital money and the climate change challenge and the amount of money that needs to be mobilized and then redistributed differently than is distributed now. You're talking about the outlines of a very different system than we have now. And then the struggle is going to be always how you go from here to that, right? And, that's going to be the struggle and the debate. And I do believe that within a reasonable period of time, which is that maybe you were like my age, let's say 40 years from now or 50 years from now, people will understand perfectly well that unless these guys over there get opportunities because have financial tools for those opportunities, they're just going to come to my place. And that's going to be like that. Right? And everybody will know about each other because we're going to be all in the internet, right? So that is going to change the way things work, that in itself, right? My choice is either to accommodate you or to give you something to keep you busy with. Right?
There is the concept called globalization. I don't know how popular it is.
What?
Globalization.
Yeah, right. Well, that's about that is going there, right? It's not popular. It's popular maybe, I don't know where in India you're from, but
In India, it is quite popular.
yes, I know. But where are you from?
I stay in New Delhi in India, though I'm from Bihar.
Bihar needs a lot of money. Yes.
Yes.
That's a very tough place. It's like a desert, becoming a desert.
No, Bihar is not. Bihar
No, I know, but
very populous.
it is hugely popular and very populous and very poor, but it also has a lot of problems with droughts right now. Right? No,
What?
Ludlow and all those towns are not hit by droughts, floods and droughts. Yes, floods. Yeah, you had a flood recently. Yes, that's true. Right. But when I see pictures of Bihar, it's very dusty, right? But anyway, I don't want to argue with you. You know better than me.
No, it is not.
Yes, correct.
But it is not desert. It is actually a very fertile area.
Right. Okay.
Very clean.
Good. Yes.
What I was asking, because you think that globalization is not very important, but in India it is quite popular right now. And can it work with the financial systems?
Yeah, that's a really good question. But this is why crowdfunding and microfinance and all those things are very important. They're kind of extensions. It's like often when you build networks of any kinds, the last mile is the most difficult one, right? You can have a pipe system all over the place, and then the last little pipe to this place and that place, that's the hardest thing, right? And with localization, that's very similar, right? The financial system, it's easy to get money to the government of Bihar and Ludlow, but how do you get it to this guy over there, right? And usually these pipelines are clogged because of political power. And
Clogging is the most.
yes, clogging is that's the problem for most countries. Right? Most countries have a political representation where the one or two large cities are the waterheads of the whole place. They absorb disproportionate amounts of resources because the political power structure is in the cities. Okay, so most developing countries hurt their farmers in order to have cheap food for people who keep them in power, which are the urban populations, right? And that's a bad deal for both, right? And for both sides, right? And so, but it also then means that you have to discriminate as a government. You have to discriminate. You politicize development. And most governments are inclined to do that because the power structure is there's a very small elite, right, which doesn't want to get bigger.
Yes.
Because the rents are higher for them when they're small.
Power tends to get concentrated.
Correct, absolutely. But I also think that the politics that we're going to go through are going to be very different because, I mean, there's going to be this local, global, this from power push from below and push from above is going to be crucial. So governments are going to be under very different types of pressures. Any other questions? Yes.
There's a bit of clarification on the ESG, the environmental sustainability governance.
Yes.
In your submission, you indicated that firms that are adopting its committing to its implementation are in the long run more profitable than those that might not be.
Right.
But with my limited understanding, it should be that maybe the firms will have to, or companies will have to commit more resources to the environment, maybe the employees, as well as directors or whatever, where they
have better governance.
So in actual fact, they are spending more.
Yes.
But how can that translate into rather firms making profit in the long run? I don't get it.
Well, that's precisely because it's in the long run, man. If I invest, like just look at yourself, right? You're here. You're not. I mean, I don't think you were born here, right? You came here, right? So you come here presumably because you want to study, and you want to study in a kind of certain place that allows you to go around and says, okay, I did my degree there. I speak those languages. You're investing in yourself, okay? You're investing in yourself so that over the life cycle of your life, you have a chance to have more rewards. Right? So but in order to do that, you have to spend quite a bit. Okay, I mean, I don't know how much you're spending and so forth, right? But just to go from wherever you came from, Ghana or whatever, to come here, that's already a lot of investment, right? And your family is investing in you, right? And that's for the long run. You're not doing this because you're going to have an immediate benefit 2 or 3 years from now. You're doing this for the long run.
Yes, so
does that make sense?
Yes, but my listening, the those that are not committed to ESG,
right?
Certainly they will have more resources at their.
They're often manipulating. They're often taking short-term measures that actually hurt them over the long run, right? They're overpaying their leaders, for example, and they're overpaying their CEOs and CFOs and COOs, irrespective of how well they perform. And they're doing share buybacks. They're buying back their own shares, or they're investing. They have an external growth strategy of just buying up other companies rather than building capacity. Okay, so they have a very different way of running. Okay, and they're also they're mistreating their workers, so they have lots of turnover, which is very expensive for them ultimately. Right? You get constantly new workers, and they're constantly pissed off, and the moment they come, they want to leave. That's not a very stable situation, right? Even though you keep them exploited better. And so you understand, if you exploit people, there's going to be a lot of turnover. on the bottom line, vis-a-vis your financial statements, it looks good, but as a functioning societal organization, it's terrible. And so think of my answer as exactly, you have a choice. You can either do financialized rule, and then you manipulate and you think short term, and you just, or you think long term, and you invest in the long term. And with climate change, this choice becomes very dramatic. The moment you have to have a climate plan, you have to think long term. And now everybody, all firms are going to have climate plans. So they're being forced into a different way of thinking, a different way of acting. And the ESG is just the vehicle to force them to do that. But to go back to my first part, you have to, if you want to have growth and profitability over the long run, you have to think and act in the long run. Those are good questions, very good questions. Yes.
When we think about some of the good things of capitalism, but also some of the major problems of capitalism come from its inhuman propensity to growth.
Yes.
Or
Yes.
the lyrics need necessity to growth.
Yes.
And then
It's a fetish.
yes, and then obviously it creates a lot of problems in terms of environment.
Mhm.
We can think, for instance, about China, who they are investing a lot in energy, but they are growing. In relative terms, the fossil fuel is declining, but in absolute terms,
It's still growing, and they're still emitting more and more every year. Yes.
So, and then we can deal with this situation either with the degrowth,
Yes.
but then it may create a lot of tension socially speaking.
Yes.
And
Maybe not, but yeah.
maybe not.
But anyway, go ahead. It's not popular in most places.
Now, I want to listen to your opinion about
Degrowth. What I think about degrowth.
degrowth. But then what I see is that, well, at least in the periphery, when we do not grow, we create tensions, and it's bad for the population. Or we can still keep growing, but then we have to deal with this systemic need of growth in totally different terms.
Right.
Having a new pattern of growth, which is not so hard. So I would listen to you about this.
Yeah, I mean, I'm kind of split on that, right? So my current answer is that I would like to have my cake, as we say in English, I'd like to have my cake and eat it too. I'd like to have both. And the way, I mean, I think the best political way to deal with, to answer this is to say that we should have a transition. There is also going to be a transition to sustainable growth. And sustainable growth may not be degrowth, but it also clearly is not going to be the current growth, right? So one issue about growth is population growth. And at what point do we realize that we don't need as many human beings, right? And so one thing that's very obvious that we've known for a long time is that if you give women power, population growth is not a problem. Women decide in a very powerful and profound way at what point they can afford to have kids and how to have them and how many to have them. And they never want to have 6 or 8 or 10. They want to have 1 or 2. If they have power, they have 1 or 2. 1 or 2 is fine. If you go to a birth rate that basically replaces the death rate, that's fine. We can definitely get there within a short period of time, not so long period of time, if you give women all over the place the power over their bodies and their budgets. And so, that's a social revolution that is possible, even likely. So once you have zero net population growth, then you have already taken half of the problem of degrowth. But as you go into a system where you're embedding your economy much more consciously into its environmental placement, if you will, and you're looking at the environment in terms of eco services that are social, that are socially beneficial, right? That you're looking if you start thinking of eco services as a public good, like all those birds flying around here, make them not disappear, okay? Keep them. Then you're going to start thinking about growth differently. So we're going to have to make a choice, and the choice is implicit already there, because we now know that how we have dealt with this, Georgescu-Rogan problem of rising entropy is killing us. It's literally killing us. Once we know that our growth path is a killer, and we accept that we cannot go that way, then, the question becomes quite different. It's not the question between the current growth pattern or degrowth. It becomes a question of a different growth path. And what you prioritize as a growth path. And the public-private mix and the finance-industrial mix, these mixes get changed in the process, okay? Different industries become the leaders, and many of these industries are dematerialized industries that are not very polluting if you build them correctly. Right? They're going to be high value-added services, like communication stuff, right? But you can have a communication infrastructure that's far less energy consuming than what we're doing right now, right? Much more energy efficient, if you will. So you can gradually move towards a steady state. The idea is to be in a steady state where you're not destroying the environment. If you commit yourself not to destroy the environment, you automatically have a different growth path. It doesn't have to be zero growth versus growth factors. It's a different growth. And that's a better discussion. That's like a dialectical process where you have a synthesis that you're making as you're going along. Right? That's how I see this. It's going to be impossible to talk to Americans about degrowth for a long time. But it's also going to be impossible for developing countries that need to grow to talk about degrowth. They're going to go crazy if you tell them that, right? So you have to have a different vision about this, but not just politically expedient. I literally believe that unless you embed your economy into the environment so that the environment stays and doesn't get destroyed, that is a different growth path. Any other questions? This should be the end. This is the end. Thank you.
Thank
you.
Thank you.